Really excited to be here and have this conversation. I'm Jeremy Allaire. I'm the co-founder and CEO at Circle. Circle is probably best known for issuing and operating the platform behind USDC, which is one of the largest dollar digital currencies in the world, and really a platform that developers in the blockchain ecosystem have been building on for several years. Circle is a company that I co-founded about 8.5 years ago. And fairly early in the crypto space, and have sort of spent my career building internet platforms, internet software platform businesses, and now really excited to be working on how to kind of rebuild the kind of core financial and economic infrastructure of the world on top of the public internet using public blockchain infrastructure. So that's a little bit about myself.
Thanks, Jeremy. John?
Hi, guys. I am John Wu, president of Avalanche. Really excited to be here with Jeremy and the team here. Avalanche is the team behind Avalanche, the fastest growing blockchain out there. We're very excited to say that on any given day now, we have the same amount of transactions as Ethereum does. So that's a great accomplishment. And I'm also been a tech investor for most of my career. In fact, I've been following Jeremy from afar, even way back to his Bright Cove days. So I've known of him for a while. We met a few times when I was CEO of Digital Assets Group at Shares Post, trying to tokenize securities back then when we were both on different parts of this journey about 4 or 5 years ago.
Yeah, so, absolutely.
Yeah, so it's been a big fan. It's great to see where things are. And I think, we're aligned in the sense that the goal here ultimately is using blockchains for business applications and for tokenizing the world's assets. And there could be no better partner than Circle. So very excited to be here.
Awesome.
Thanks, John. Thanks, Jeremy. So let's dive right into some questions, basic housekeeping. We're gonna have some questions, some back and forth discussion, and then we're gonna leave the final 10 minutes of this conversation for the questions of those of you listening at home and at work. There's a Q&A button on the bottom of the screen. So please throw your questions in there. I'll make sure to go through them and ask later. So John, building on what you were saying and working with Circle, why USDC on Avalanche? How did that go? Why did we do USDC?
It's 2 reasons. One, besides the ability to integrate them easily, and we have firsthand experience knowing that it's been a pleasure from the tech side to work with them. They are, probably from a compliance and from a regulatory perspective, a transparency perspective, I don't even have to say anymore. It's incredible what they've done to create trust in the community. And if we are going to take, business applications and put it on the blockchain, you have to have that trust, that transparency, and Circle has earned it from many, many hard years of working with the government. Jeremy goes down to DC all the time. I see him on TV all the time. So they've done a great job of it. And if we are going to migrate traditional enterprises, digitize traditional assets, you need that trust, and they have it.
Thanks, John. Jeremy, USDC is now live on a number of chains, but why Avalanche?
Yeah, I think maybe to step back a little, I think, when we started working on USDC, it was, over 4 years ago, in fact. The kind of concept was that there needed to be kind of like an HTTP, like a protocol for money on the internet. And we were interested in trying to build a protocol and a standard for dollars on the internet. And, when you think about other technology standards, like the web standards themselves, like HTTP and HTML, which we all take for granted because we just use this stuff every day in our lives. What makes them really powerful is that they're cross-platform, that if you build a web page, it's not locked into any particular operating system or browser. That's the promise of open standards. And I think, blockchains themselves provide that as a kind of almost like an operating system layer to enable applications. And so when we think about digital dollars or digital euros or other digital fiat that can be, built on top of digital currency infrastructure, as a first principle, it's really important that there's not like lock-in, that, that individuals, can take advantage of the innovation curve that's happening in the underlying infrastructure layers that are driving this ecosystem. And so while back in 2017, maybe Ethereum was the only, chain that had kind of production ready with tokens and smart contracts and things like that, there's obviously been this huge push towards the next generation of layer 1 chains, of layer 2 infrastructures. And so starting really about 2 years ago, we had originally wanted to be, multi-chain in how we approach things, but starting about 2 years ago, we started to say, look, there's now a wave of innovation that's happening and coming, and we want to make sure that USDC as a standard can function on the leading, chains. And so, as you've noted, we've launched a number of chains, and we're very, very excited about the partnership with Ava Labs and getting USDC launched on Avalanche. And I think for us, the obvious thing is sort of, we want to make sure that this works on all the infrastructures. But the more important thing is, we want to go where developers are going. We want to go where applications are going. And, I think it's been really impressive to see the traction that Avalanche has with developers, with apps in DeFi and in other categories as well. And I think for us, and maybe this will tie into some of the other conversation points, at the end of the day, this is about going from a market that's been largely still an early adopter market to a market where mainstream consumer applications and mainstream businesses are building on this. And I think scalability, performance, and sort of, ultimately, platforms that solve that core trilemma in the blockchain space have a really great shot at being, platforms that people are building on. And so, USDC itself is a kind of platform and something developers can build with, but it needs to coexist and operate with other leading platforms. And, all of that is sort of what brought us to work on this and bringing USDC to Avalanche.
Thanks, Jeremy. With that in mind, and talking about kind of that base layer infrastructure, I want to pivot to kind of another question. I'll turn over to you, Jeremy. What are the benefits and value of using a public blockchain for those listening in, from those from traditional business that are listening to this discussion today? What are the benefits and value of using a public blockchain versus using traditional payment networks that exist that we're all used to on a daily basis?
Yeah, I mean, this is sort of, for us, this is like deep first principles. And I think when we got started working on Circle 8.5 years ago, the fundamental insight was that, essentially public blockchains, which, back then there was really kind of Bitcoin, but there was a vision for what these public blockchains could be. The public blockchains represented the next logical infrastructure layer of the internet. And I look at these as kind of internet operating systems, and they provide a common set of infrastructure for people to build applications where you want to have, immutable data, where you want to have transactions that can settle, around that data without relying on a middleman, that can be open and accessible everywhere, and compute, where you can actually write code that intermediates that again is not dependent on some middleman. As an infrastructure layer, that opens up huge categories of new types of applications. And in particular, it opens up this incredible opportunity to build a protocol layer for the storage and transmission of value, including tokenized fiat. And what that ends up looking like is, rather than a world where, kind of payments have historically been what I think of as like a walled garden. If you remember the early days of the internet, you had all these walled gardens. You had AOL and you had CompuServe, and Microsoft tried to build Microsoft Network, and everyone tried to have their own kind of closed loop ecosystem and said, that's where everyone's going to come. And then the open architecture of the internet emerged, where anyone in a permissionless way could connect to this network, connect a server to this network, put content on this network. And that unleashed just an incredible amount of adoption and distribution for information and communications. That same openness is what becomes possible with value exchange. We move into a world where effectively through public chain infrastructure, it'll be possible for any counterparty, a household or a firm, to directly transact with each other over the public internet at the speed of the internet, with the cost efficiency of moving data on the internet, with greater security and privacy assurances than even in the existing financial system. And that means a higher velocity of economic interaction, a higher velocity of financial value exchange, which means economic value creation and growth. And so this is really about the next generation of how commerce is conducted, how trade is conducted, how financial arrangements are conducted, moving that to the public infrastructure and radically lowering the costs associated with what has traditionally been something where there are time delays, tolls, and taxes that are imposed on the real economy through this infrastructure. So really, I think it's that was a very long-winded way of saying public internet infrastructure provides society with the greatest ultimate benefits and encourages the most economic activity around it.
Thanks, Jeremy. John,
I'll add on to that. I mean, it took Visa and Mastercard 30 plus years to build the merchant network, get all the banks involved. On a public blockchain, the composability of it and you can actually, the accessibility of a public blockchain, what Jeremy is able to do now at Circle is so much faster. He won't need 30, 40 years to create this network.
I mean, I think it's an interesting, point, which I agree with. Thank you, John. But I think what's been interesting is once you have a protocol out there that anyone can connect to, it kind of takes on its own life. And so today, I mean, there are thousands of different products and services that plug into USDC, and there are wallets and exchanges and protocols and others that just connect to it. And that has kind of created its own kind of growth, and it creates kind of network effects that creates more value for people that both use it and hold it. And that sort of shows up in the numbers and the growth. For us, the critical thing is we need for this for all of us to kind of realize, I think, the kind of mission and ambition that we have around impacting the financial system. We need scalability. We need to be able to bring not just tens of millions or 100 million or 200 million people into this, kind of crypto economy. We need to be able to bring 1 billion people in. And so we're kind of going through what I like to refer to the dial-up to broadband upgrade cycle in blockchain infrastructure. And as we go to the broadband phase, that's when the pipes get wide, and that's when people can really start to do stuff. And I think what Avalanche obviously has done is a great example of kind of upgrading those pipes, if you will.
Thanks, Jeremy. Jeremy, you just highlighted the benefits, of course, of a public blockchain versus the traditional payments rails. John, I know you've been a tech investor for such a long time, and you've seen the growth of this industry. So if you could highlight a little bit of what you see, why the benefits of a public blockchain is better than, of course, the traditional networks that people use on a daily basis, but also importantly, if you can highlight the main benefits of Avalanche and why it's suited for these users.
So one of the main benefits of Avalanche, it's known as the fastest chain in terms of finality. Settlement equals, settlement is payment. The transaction is instantaneous, basically. And if you can attach that to USDC to enable and loosen the friction of making transactions happen, what you're talking about, I think Jeremy alluded to earlier, is you're increasing the velocity of money, and you're taking trapped money out of the system. In equities, there's 2-day settlements. In fixed income, sometimes there is many days. When you buy your Apple phone from a merchant, whether it's an Apple store or at AT&T, and you use your credit card, sometimes the merchant doesn't get it for 60 days, 45 days, at least a month after. So when you can have instant finality where settlement is payment and transaction is instant, you unlock a lot of that trapped capital, and the velocity of money can really, really start to move. That benefits everyone. So that is like one of the biggest benefits I see.
Great, thanks, John. Jeremy, what makes USDC more trustworthy than other stable coins, and how are enterprises using USDC today?
Yeah, I mean, I think the trust piece is a really big one, and something that John, highlighted early on. So, for background, when we set out to build and launch USDC, we had in the prior several years spent years building one of the most regulated crypto finance companies in the industry. We worked with the federal government in the US, state banking regulators in the UK, to build a model where we could safely go from existing fiat infrastructure into public blockchains and handle that. And so we had become, kind of widely licensed for that kind of activity. And when we thought about, building a model for dollars on the internet, it was really important that it be done with compliance and transparency. And so, before launching the product, we needed to get regulatory approval to do it, which we were able to do back in 2018 and launch it, throughout the United States, and now certainly making it available more globally. And we operated under a whole set of regulatory supervision. I don't think a lot of people understand, all of this. So the first is, we operate under what is called money transmission law, which means that we are required by law to hold full reserves on a one-for-one basis for every single dollar that a customer is using on this payment system. It's very similar to the same regulatory framework that applies to PayPal or Square Cash App or Venmo or Apple Pay or any of these sort of modern innovations in payments. Obviously, we think stablecoins are an even more significant innovation than those. But so we're examined and supervised by regulators. We are examined by a global public accounting firm and audited by a global public accounting firm. And we went, further and decided not only do we have all those regulatory requirements, we also went further and from day one, published monthly attestations from that global financial accounting firm that looked at the actual reserves and said, okay, they meet the issued and outstanding of this digital token. So I think overall, that's been important. The other piece is, at the end of the day, what people really care about with a stablecoin is, can you redeem it? Is it actually redeemable for $1? And so we've spent 4 years creating, an infrastructure that provides both institutions and individuals with many, many ways to easily convert and redeem USDC, always for $1, whether it be through a Coinbase account, a Circle account, an FTX account, all these other kind of platforms that are out there. And that's been really critical. And so we're supervised, we're regulated, we're compliant, we're transparent. We work with policymakers on advancing this whole space so that this becomes an acceptable, part of the mainstream financial system, which is obviously where we're headed. We want a new and improved financial system that's built on the promise of public blockchains, but we also need to make sure that we're doing that in a way where the consumer protections are really in place, which is what people care about, where the run risk, as people think about, or other risks that might be there. So we have really been at the forefront of that, and I think that trust has been, I think, validated by the market's sort of adoption and acceptance. To the other question in terms of the enterprise use cases, we see an incredibly broad array of use cases for USDC today, and really over the past year and a half, it's just been continuing to expand, and we see every day many different types of businesses that are onboarding into this ecosystem. And as I like to say, when people ask what's the use case for USDC, I'm like, well, what's the use case for $1? And it has a lot of use cases. Now, today, stablecoins and the protocols that they run on, and the UX, or the user experience of the digital wallets that they operate with, it's not all the way at the point of like, hey, I can like seamlessly use this at every point of sale or peer-to-peer. Like, we're getting really close, but there's like there's the last mile problem. It's maybe not the right metaphor, but there's a kind of UX layer, and we're seeing amazing work in the wallet community working on those problems right now. So we're quite optimistic. But even with what it is today, where you kind of need to know what QR codes are or blockchain addresses are, and understand how to use that in a custodial or non-custodial wallet experience. The use cases today are quite broad. At one end of the spectrum, you might have a consumer, an end user that's making a micro payment for a piece of scarce digital intellectual property, aka an NFT, and they're spending a tiny fraction of a dollar on that. And at the other end, you've got some of the largest electronic markets firms in the world that are using it to settle bilateral trades for $500 million between each other. And so you've got the most demanding kind of capital markets use case on one end, and you've got what some people might call a trivial kind of digital content use case on the other, but a lot in between. And so what we've seen growing over the last year has been more and more growth in business to business payments, more and more growth in international and cross-border payments, more and more growth from fintechs and other financial institutions that want to build this into their own products and services. We've seen tremendous growth in what have been rapidly growing savings and lending or borrowing markets, which is creating a way for individuals and firms around the world to borrow and lend digital currency efficiently, securely, with good risk management around it, and that's DeFi and CeFi. So those have been really, really significant and growing use cases. And now we're starting to see more and more businesses that are actively looking at this as kind of something that can be part of their kind of treasury infrastructure. So a lot of growth in use cases, and that's something that, again, as we bring USDC and have partnerships like what we have with Avalanche, where you can get to scalability and reliability and speed and the like, it really opens up the use cases very, very significantly. So we're pretty excited to see what kinds of developers and businesses are building on that.
Great, thanks. John, can you highlight some of the current use cases that exist within enterprises on Avalanche, and kind of also where you see things going with Avalanche? And maybe, I know there's some things you can't mention, but just give an idea of where things are and where you see things going.
Absolutely. So I can tell you with one example where things are in terms of enterprise use cases on Avalanche blockchain, and where in that same example, they hope to be in the near future. So Deloitte, we have a great partnership with Deloitte. Deloitte is actually building an application on top of Avalanche for their end customers. In this case, it's FEMA, a government agency for disaster relief. When information and workflow and automation has to be done in a way that's scalable with so many local municipalities, insurance companies, individuals, they want to be able to have it in an environment where it's secure, and also that information can instantly be shared in the proper way, and cutting out all the excess workflow that would be required. That's for them to choose Avalanche as a public blockchain is already saying something. Ultimately, at the back end of that is also sending the payments to individuals in a timely manner, because ultimately what you want to do is not just reduce costs for people, but to get the checks for victims in a timely fashion. So as USDC is coming on to Avalanche, and as that part of the equation gets built out, possibly in a subnet construct, which is kind of like a separate execution environment, a blockchain on top of the blockchain at Avalanche, the next part really will be integrating the fintech aspect into the workflow automation and database management that they're already doing.
So John, I'm seeing questions coming in about this. I'm gonna kind of jump in here. Can you highlight a little bit? You mentioned subnets on Avalanche. Can you talk about what subnets are, why you believe that they're going to be a big kind of aspect going forward, and how they can enable kind of scale?
I would almost think of subnets for the casual person who's casually interested in Avalanche. Think of it as blockchain as a service. where companies or verticals can take certain SDKs that Avalanche will create and provide, and they can use the pieces that make sense for their business. If it's a gaming company, it's high throughput transactions. They want it in a way where they can have those transactions, but not have to validate all the other transactions on the Avalanche chain that has nothing to do with their specific game. So that's kind of like a horizontal scaling methodology. Now, for the enterprises, what they like is they can create using the Avalanche consensus protocol, but they can create almost a private blockchain. It's effectively a private blockchain where they set the governance through the validators, and they can basically put in whatever rules, whether it's KYC, AML, or other governance requirements that they have for different jurisdictions. So suddenly they have a compliant ecosystem that they can create very easily. So there's two use cases. For the more crypto native type of subnets, it's about their needs. But for the enterprise side, it's about compliance, it's about governance, and it's about being able to take the benefits of a blockchain, but at the same time, provide the necessary regulatory barriers so that not anyone can just enter.
Thanks, John. So we discussed subnets, something that's going to be coming to Avalanche, and that can unlock a lot of use cases. But to take a step back, USDC deployed natively on Avalanche on our Cchain. Can you talk about kind of the benefits of the Cchain, what's happening on Avalanche's Cchain currently, and highlight the EVM compatibility there?
So think of Cchain as almost like a subnet, a Ethereum, an EVM compatible subnet. And the benefit of that Cchain is basically you can run Ethereum assets on the Cchain faster than you can on Ethereum because the Avalanche consensus protocol. And the other benefit to Avalanche is assets can move back and forth on the bridge that allows users to come back and forth from Ethereum to Avalanche to get a cheaper execution environment, and also try different applications that may exist on Avalanche that may not exist in Ethereum. So for Avalanche, it serves two great benefits. One, allows development, just like in the same development, Solidity coders, but also it allows the assets to move cheaper and faster than you would even on Ethereum.
So John, you're highlighting, the kind of user experience that developers and users, whether in DeFi or enterprise, are used to with Ethereum, can be done equally on Avalanche, but faster and cheaper. Jeremy, I want to turn this over to you and ask you, let me take a step back. On Avalanche, between the Cchain and subnets, there's going to be interoperability. That's within the Avalanche ecosystem. Jeremy, how do you and Circle see kind of the path forward, being multi-chain and having USDC on many chains? Does Circle have plans to create interoperability between USDC on these chains so that if there is a payment mechanism or application, if I have Avalanche USDC, can I pay someone with another USDC? And what does that look like?
Yeah, it's a great question. So when we embarked on the kind of multi-chain path, and I think we were very early in sort of being really focused on multi-chain, back really 2 years ago, it was really important to us that we provide seamless liquidity and swappability across chains. So today, institutional counterparties, meaning firms in the ecosystem, can access a API from Circle to be able to essentially do cross-chain swaps, and that's as fast as you can do a transaction on either of those chains. And so you're seeing, for example, more and more leading exchanges starting to light up different, support for operating USDC on different chains. And you're seeing that in more wallets and the like. That underlying kind of multi-chain swap capability is something that, we're seeing more and more ecosystem players build on. Now, that is a trusted kind of facility where we are dealing with kind of compliant counterparties. We're also seeing, obviously, a lot of innovation in cross-chain bridge technologies that are trustless, that take advantage of the underlying, security assurances and kind of contractual locking mechanisms that exist on different chains. And so, we're seeing, many really interesting projects on the cross-chain bridge side. And some of those are being built in such a way that they're really also developer tools, right? Where a developer could build on top of a cross-chain bridge to provide a capability in an application for an end user. And so I think between our own underlying commitment to ensure that one can essentially, send USDC from one chain and have it then in turn, send out on another chain as an API service that is available from Circle commercially, to the kind of growth in just this is a general problem that's not just specific to USDC, right? It's something that exists for a lot of other digital assets. That the maturation in that cross-chain bridge space is something that I think is how this gets solved in the long run, much more than a centralized model. But certainly seeing really good progress on both of those, and see that already being adopted for people who are taking advantage of Avalanche, obviously.
Speaking of bridges, Jeremy, John, I want to ask you, the Avalanche Bridge came out last August, has seen tremendous success and growth. A lot of people bridged USDC from Ethereum over to Avalanche, nearly $1.6 billion worth. What is the benefit of having USDC native to Avalanche rather than just relying on the bridges?
Yeah, well, first of all, we're super excited for the native USDC because it provides now two avenues for people to get into the Avalanche ecosystem. If you do it over the Ethereum bridge, you end up with a USDC.E because what you do is you wrap one and you mint another one over. Or now you can go straight to Coinbase, and through Coinbase, you can have the USDC and ultimately come directly. So it's like skipping a step of going to Ethereum. So that's the big benefit, where you can use USDC in a more convenient way on Avalanche if you so desire. Regardless, both are still being supported. And together, the two of them are one of the largest used, I think they are the second biggest in terms of coins together used on Avalanche.
Yeah, definitely USDC is the most widely used and adopted stablecoin on Avalanche. And I will jump in and do a plug real quick for the community that's listening. There will be a migration plan that we will be enacting to unwrap USDC.E and move it over to native USDC in conjunction with exchange support for native USDC on Avalanche. So I know that's something the community has been asking for a while. That project is underway. It's going to take some time to do that properly. So thanks for your patience. Wanted to switch gears real quick. Jeremy talked about something that was important in terms of wallets and the things that are happening in wallets. A common question I think that everybody here gets asked all the time is, when will you know blockchain has arrived? When is this industry going to have its seat at the table? I often like to say that it's when you don't know it's being used, right? In the same way you don't know how Zelle or PayPal or et cetera are used. But John, you've seen this industry grow, and you've been in a lot of projects that deal with wallets and with adoption. In your opinion, what's it going to take for crypto and blockchain services to really, quote unquote, arrive?
Well, I think you answered it. Like, people don't realize they're using AWS, they just use it. 10 years ago, when enterprises were throwing up, where they put their servers, it was either a cage downstairs, or do I really want to trust everything to Amazon? And now it's just part of what they do. I think ultimately that is the situation where it's just part of the fabric of how it works, and no one knows how exactly works. I don't know how to, I'm not a car mechanic, but I drive a car. So that would be the same analog, if you will. I do think, though, it will take some time. A lot of great crypto technologists are just getting into really understanding UI, UX, and how the casual customer wants to see things in a wallet and what is preferenced by those types of new users. So when you can get and convert those, call it, newer users, and give them the same experience they see in a crypto wallet that they would see in PayPal or Venmo, which is owned by PayPal, that's when you know that you're there. And by the way, PayPal and Venmo, when they support crypto, underneath the hood, it's still very messy. What they do well is to make it so that the user has no idea how messy it is under the hood.
Great. Jeremy, where do you see this going? Where do you think is really going to be the breakthrough moment for mass or retail adoption?
Yeah, I mean, we're seeing, I think, some really encouraging things right now. And I would agree with a lot of what has already been shared here. But I think now that sort of third generation blockchains are here, and now that the kind of range of applications that people want to build on these blockchain infrastructures are really reaching into consumer scale applications and a wide variety of consumer scale applications, that combination of things is going to lead to, I think, the user experience improvements where this does become, more invisible and in the background. But in terms of ultimately, when I think about this from a financial application perspective, these are sort of two-sided markets. And so you've got end users and you've got businesses. And I think while we're seeing some big categories that are kind of crypto native categories, Web3 social, NFTs, digital content, games, DeFi, these kinds of applications, these are all growing and the number of users will grow and grow. I think, some catalysts are going to be when, existing consumer scale fintech apps plug into this. And you already see the front edge of that, right? You've got, we're at 65, 70 million users of Coinbase. You've got major consumer fintech apps, obviously building scale, Super Bowl advertising and the like. You've got major players like Cash App, Venmo, PayPal, Revolut, as examples that are already integrating crypto. Now, a lot of that is sort of buy, trade Bitcoin, but they're clearly crypto committed. And so as these protocols get lit up in apps that collectively reach 500 million users, then you start to see, the breaking down of those walled gardens, as I like to refer to them before. And so it's sort of always asking the question, why can't I use Cash App to pay someone who uses Venmo, to pay someone who uses, Apple Pay or what have you? And the reason is you can, if you use stablecoins and you use public blockchains as an interoperability layer. So I think we're going to get some breakthroughs like that. And as that happens, internet businesses, people who run commerce on the internet, it will be so obvious to them that they should just have a digital wallet and they should just have the acceptance of payment transactions. It's kind of like when businesses realize that they could have a website and their customers could actually interact directly with them. It was like such a novel concept, and order products or engage in services. The same thing here with financial interaction. Businesses will realize, my God, you mean a user can actually just spend digital cash like transactions directly with me, and I'm not paying interchange fees, and it's an irreversible settlement, and it's highly secure, and I have the same frictionlessness that people interact with me in all these other digital channels as a company. That's the kind of thing that I think will create the snowball effects that then get this to be something that if you're an internet-centric business, if you're not doing this, you'll be at a competitive disadvantage.
John, do you have anything to add to?
I mean, so I have a question. Fintech has been disintermediating the banks. With what Jeremy just said, does that mean Circle Pay and crypto native type stuffs will disintermediate fintech apps?
Well, the way I look at it, it's a great question, is you have kind of the existing banking system, and dollars today are sort of SQL databases and common delimited text files that fly around between these regulated database operators. That's actually what electronic money is. And fintech, what we think of as fintech, whether that's Apple Pay or Venmo or around the world, lots of different products like that, is really just lipstick on a pig. It's just a different user experience on top of that same awful underlying system. What blockchains and digital currency and things like stable coins and all that other plumbing do is they actually build from the ground up a new base layer for the storage of value, the representation of value, the movement of value, the kind of financial contracting around value. So it's kind of like building up a new economic infrastructure from the ground up. So I like to talk about, crypto finance is sort of like the deep tech of fintech. It's actually going to the core and solving some of the core problems, like deep in the nature of how money works. And then, kind of builds up from there, as opposed to, I think, what fintech has been, which has been sort of at the periphery, trying to improve the user experience from the outside, but still underneath, it's still that awful kind of infrastructure. And so I think, in many ways, things like stable coins, DeFi, public chains, crypto finance, I think are really competing with not just the fintechs, they're competing with the banks, they're competing with capital markets, infrastructure companies. It's sort of that whole arena there's an opportunity space to kind of recreate it more in the image of the internet.
I want to build on that point. I think I'll summarize it as Web3 is actually really new innovative technology. I think if I look back on how PayPal did it and Square did it, I think PayPal was actually kind of business innovation where they aggregated a lot of small accounts and became one large merchant of record to pass on cost savings because there was one big Goliath. Square, very clever. They kind of took on risk in doing loans to merchants, et cetera, and actually kind of inverted the cap table by putting them even before the debt holders on it at a company in terms of recuperating the dollar. So there was a lot of like business innovation and creativity. But as Jeremy said, Web3 is actually ripping out the guts of the technology and making it from a substrate level much more efficient.
Thanks, John. Thanks, Jeremy. So I've been weaving in some of the listeners' questions into my questions and adding on, but I do want to take this opportunity to ask you both specific questions that people listening on today's call have been asking. Jeremy, I'll turn this one over to you first. Several questions ask kind of a mix of, if CBDCs do come eventually and nation states issue their own digital currencies, is that competition to USDC or for potential other stable coins issued by Circle through Center? Or is there competition there, or is there a complement? How do CBDCs and USDC kind of live side by side?
I mean, there are a couple of big pieces. I think the first is, if you look at, in particular in most advanced industrial societies and in the West, the history of electronic money innovation is a history of private sector innovation, and it's a history of private sector innovators working collaboratively around standards and interoperable standards. That is what brought us the international wire system. That is what brought us the automated clearinghouse system with checks, credit cards, debit cards, ATMs, PayPal, Apple Pay, all of the, almost every kind of modern convenience that we've thought of in these medium of exchange, these shifts in what that is have really been driven that way. And that's what we're seeing today. We're seeing, digital currency growing out of private sector innovation and open source and open internet innovation. So it's an even more powerful kind of set of forces coming together. And I think in many ways, digital currency, kind of central bank digital currency projects are a response to the fact that this is happening in an organic, open, kind of private sector driven way. So what do I believe? I believe that the predominant model for how individuals and firms will use digital currency in the future is going to be by building on open internet standards and private sector innovation. I think that will continue to be the case. And I think there'll be more and more regulation at a national level around the firms that are, operating that market infrastructure. You can think of that as a really critical market infrastructure for how kind of payments and money can work. And I think, that's most likely to get broad scale adoption over the next 2 to 3 years. Efforts to build central bank digital currencies, first of all, in the US or Europe, just taking those as examples, are going to take a very long time. will be fraught with very complex policy issues, will introduce the risk of technological obsolescence. Is Accenture going to be building like a project and maintaining that from a taxpayer burden perspective is significant. At the same time, the private sector is not standing still and will grow significantly. Can there ultimately be some kind of interoperability, if you will, or commonality there? I think over the very long term, I think that's actually quite likely. I like to use the example of years ago. I met with the chief information officer of the Federal Reserve at an event, and I asked him, what is the architecture of the dollar? Like, because the dollar is like, there's a tech stack. What's the tech stack of the dollar? And the tech stack of the dollar is like, it's like Oracle database cluster with multiple redundant clusters of Sun microsystems, computers. I'm like, okay, well, that's what the dollar is. Now, we as individuals don't interact with that database. Banks themselves don't really interact with that database. That's like deep in the plumbing, right? Could one imagine that the core architecture of the dollar would move from Oracle databases running on Sun microsystems to, cryptographically secured forms of money, not just a SQL database? So crypto forms of money at the core systems level? Sure. Is that something that I think the average person is going to be interacting with directly? No, I don't. I think there's going to be many kind of layers of intermediation and innovation on top of whatever that core architecture is.
Thanks, Jeremy. John, you've worked in finance and you've been an investor. We have questions from the community here, many of which are CFOs and investment officials that are on this call today. What's the best use cases for stablecoins in banking and in corporate treasuries and balance sheets?
Well, for payments and banking, for payments, Jeremy's covered it quite well. And for banking, if banks want to, adopt this, I think they will also, instead of like JP Morgan trying to create a consortium with other banks and using whatever private blockchain and trying to save money that way, they can save even more money and connect to users better. And maybe this is the way a big bank can fight back against fintech. Jamie Dimon's constantly saying that he's handicapped because he can't do the same things that, Apple Pay or PayPal can. I'm not exactly certain which rules he's talking about, but if there's an open permissionless system that's connected to individuals that he can use as the rails instead of the traditional rails, maybe he can, because right now, I guess the edge for a PayPal or a Apple Pay is they are payment providers, not banks, and as a bank you have different rule sets. So that's one example. For securities, I think tokenizing all types of different securities, especially private securities at some point, are hard to locate securities or illiquid securities, maybe real estate, maybe art, in a way that is secure and trusted, is going to really increase liquidity and better price discovery for all these illiquid securities. So that is really exciting. I mean, according to certain numbers I've read, there's like $720 trillion worth of securities. A lot of that is real estate, et cetera. But if you can tokenize just a small percentage of that and create liquidity for some of that stuff, that will provide more access for normal individuals.
Jeremy, how do you see the current banking system utilizing stablecoins? And then conversely, for those on the call today as well, what opportunities exist for corporate balance sheets and treasuries and yield opportunities, particularly through Circle?
Yeah, I mean, this is a major focus for us. I think, kind of conceptually, we're very interested, of course, in the kind of payment utility value of this and increasing that, and ultimately with the goal of how do we make kind of frictionless, instant, virtually no cost payments and settlement on the internet work for businesses. And so from a corporate perspective, that's obviously beneficial to velocity of business, unit economics, things like that. We're also very, very focused on helping corporate treasurers take advantage of the fact that there are now new yield opportunities and lending markets in stablecoin itself. And so we actually recently launched something called Circle Yield. Circle Yield is a stablecoin lending product that allows accredited businesses and institutions to take USDC and lend it out through Circle into kind of wholesale lending markets and access fixed rate, fixed return yields on dollars on USDC. And so that can be 4%, 5%, 6%, even 7% in some cases for 1 month, 3 months, 6 month types of terms. And that's a regulated product. It is an over collateralized product. It's a compliant product offered as a security. And so that is an offering that a corporate treasurer can understand in a high inflation environment. What are the tools available, and the robust global growth in dollar digital currency and its use is creating an opportunity for treasurers from a working capital management perspective, from a balance sheet perspective, to take advantage of that. And so we're seeing a lot of businesses starting to take that up. And that is again, that's a self-service product that a business owner or a treasurer can onboard. It's like onboarding into a commercial bank account and taking advantage of that. And that's something that we'd certainly encourage people to look at. That is an early indicator of, and an early example of what we think will become much larger, much more robust institutional debt capital market infrastructures that are actually built out entirely on blockchains, entirely using stablecoins and other digital assets. And so we see this as sort of the beginning of a long-term trend of kind of capital market functions moving more in a more fulsome way into an on-chain world. And we see huge opportunities for everyday corporations to be able to take advantage of that.
Thanks, Jeremy. I'm cognizant that we have less than 2 minutes left. I know a lot of people probably have to jump on calls. So I do want to take this opportunity to mention two things to those listening. This is the first inaugural Avalanche Powering Business with Blockchain talks. I would love to thank Jeremy for joining us today and for highlighting all the benefits of USDC, especially on Avalanche. We're excited to have USDC on Avalanche and to be working with you and with Circle. John, thank you for everything that you mentioned. And I would like to let everybody know that our next Power Business with Blockchain webinar will be with Deloitte. That is going to happen on April 5th. It'll be from 1 to 2 p.m. Eastern. So stay tuned for more information on that as John and the Avalanche team talk to Deloitte about powering business with blockchain, particularly on Avalanche. And finally, would like to welcome everybody and invite you all to the first Avalanche Summit, which will be taking place March 22nd to the 28th at the Pueblo Español in Barcelona, Spain. So we're going to be having some of the best developers, researchers, and builders that are on Avalanche and the greater Web3 community coming together. So please join us to learn about the latest Avalanche platform updates, meet like-minded investors, innovators, and creators of next generation apps for Web3. So with that, thank you, John. Thank you, Jeremy.
Thank you.
See you all in Barcelona, and have a great rest of your day.
Cheers, you guys. Bye-bye.
Bye-bye.